What's up, everyone? It's Karthik with Moneyvest. I am absolutely exhausted out of my mind for this entire week, so really happy that it's finally over. We had a pretty volatile week overall. Monday, Tuesday being green, Wednesday, Thursday selling off, and then Friday coming in with a banger. S&P 500 up a little bit over 1%. We had the NASDAQ also pushing higher, very much, up over 1.4%. Here on the day, with the Dow Jones pushing up over 462 points after Jay Powell's speech, with a very significant implication and a hint of a shift in the overall direction with monetary policy, and also potentially coming in with rate cuts. We just don't know to what extent, but the markets are very optimistic and very much pricing in for a rate cut at this point. And now the real question becomes, are we going to see a recession or not? Are we going to see the rate cuts being accompanied with a hard landing or a soft landing? And that's really what it's going to come down to. We're going to come back to this chart because there's only really been 3 instances in the past, going back as far as 1950s, where the rate cut was not accompanied with a recession. A rate cut resulted in a soft landing for the market. But the other instances, we have always seen a recession. And the ones that we haven't are these blackouts moments where in the past, in the 1960s, 1984, and 1999, we haven't seen a recession after the first rate cut. That's what we're discussing here in this spreadsheet. But we'll come back to that. As always, make sure that you drop a like, share this video with your friends and family. Again, in your other Discord channels, groups, WhatsApp, Telegram, Facebook, wherever it is that you want. Get more people involved. We're really trying to get to 82,000 subscribers. We're very close. Just about 39 subscribers more needed in order to get to that goal. And I would greatly appreciate all of you to hit that subscribe button, because I know 35% of you guys are watching the content but are not subscribing to the channel. So please do me a favor. If you're enjoying it, finding it helpful, it really helps us out in a tremendous way. So this right here was the portfolio, just a little bit up over $9,000. This was the long-term portfolio, of course, doing much better after the gain from today. Tesla, Nvidia, all of tech pushing higher. However, we actually did witness a little bit of underperformance on tech. And the reason I say that is because we had, yesterday over a $326 billion sell-off in the Magnificent Seven. And today we had over $236 billion worth of recovery. Meta Platforms was perhaps the only company, and Amazon, which was actually, Meta was the only one that was down over 74 basis points. And that was down about $10 billion, but everything else recovering really well. Nvidia capturing over $138 billion, and all in all, Magnificent Seven pulling in over $236 billion in market cap back, as they all push higher, except for Meta. Now, all of S&P 500, so over 503 companies, pulled in over $500 billion, so $543 billion. So this was all of the 500 companies in the S&P 500. So if you do the math, yesterday's sell-off was over $400 billion, of which $326 billion was coming in from Magnificent Seven, right? So that was about 77-80%. We discussed that in our live stream. But today's recovery was over $543 billion, of which about 236 came in from Magnificent Seven. So now if you do this math, we're looking at a 43% recovery. In other words, 43% of today's recovery was geared towards Magnificent Seven stocks, and the remainder, which is 57%, was all the other companies. So that just goes to show that there is, or has been, a little bit of broadening out of this rally, which is why we've seen more stocks trading back above their 50, 200 simple moving averages. So for example, right now we're over 78% of stocks trading back above their 50-day SMA, and 76% of stocks trading back above their 200 simple moving average. So yes, while there was a lot of momentum for Tesla and Nvidia, we didn't really see a lot of momentum for stocks like Microsoft. I mean, only up 0.3%, so significantly underperforming the S&P and the NASDAQ. Same with Apple, underperforming the S&P and the NASDAQ. We had Google, really only up about 1.17%. Also, Amazon underperforming, only up about 0.5%, and Meta was significantly down. So really the bottom line is that, yes, we did see a pretty decent day. I mean, NASDAQ was pushing higher, but Magnificent Seven actually underperformed, and it was actually down In some cases like Meta. One more thing I want to mention is that I've started a brand new options portfolio that I will be sharing with everyone on Patreon and Discord. So this is week 0 because we just got started. I posted this video about an hour ago, going over my options portfolio and all the trades that I've taken for next week. So I've got over a $70,000 trade on options that I've taken. I've basically sold puts. Again, if you want to get access, link's going to be down below. We're going to be doing this. This is a new category within our Patreon. It's going to be members only private videos. Every single week, I will be updating you guys with my options portfolio and what is the return that we're able to generate every single week, every single month. So that's going to be available with the link down below. There's a 16% annual discount that you can also access until the end of this month. So coming over to the big catalyst, Powell's Jackson Hole speech sets low bar for larger cuts to ensure a soft landing, but he did mention that now the time has come to adjust policy. So Jay Powell on Friday pretty much mentioned that the time has come for policy to be adjusted amid cooling inflation and softer labor market data, and the Fed chief also appeared to keep the door open to bigger rate cuts, saying the size of the rate cuts as well as the frequency would depend on the incoming data. The direction of travel is very clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks, is what he mentioned, of course, which resulted in the markets ripping higher. We did see a little bit of a pullback after he was done speaking, but then once he was done, the markets recovered fairly well, pushing up to almost new all-time highs. S&P 500 is less than 1% away from its all-time highs. Again, the time has come for the policy to adjust, and vowing to do everything we can to maintain the labor market strength as the Fed continues to curb inflation towards its 2% target. However, he didn't allude to whether the Fed is going to cut 25 basis points or 50 basis points, but said that the direction of travel is clear and the timing and pace of the rate cut will depend on the incoming data and the evolving outlook and balance of risks. So markets right now very much optimistic still for a 25 basis point cut in September. And then November is when we're expecting a much bigger cut during election. So election is going to be on November 5th. November 7th is when the FOMC meeting is. So the first week of November is going to be very, very busy for the economy, for the markets, and for the world, because not only do we have the presidential elections that week, we also have a very important FOMC meeting with markets now pricing in for a 50 basis points jumbo cut. So all in all, could actually be a very, very bullish week. It could be a setup for an incredibly bullish week for the market. So that's what we're going to be, getting ready for. And then overall in 2024, the markets are pricing in fact, now for 100 basis points worth of cuts. So coming down to 4.25 and 4.5%. And then 1, 2, 3, 4, another 100 basis points expected in 2025. Now, the Moneyvest index just crossed over 4. So this right here is where we are with the Moneyvest index, which is, again, the highest level since July of 2024. So we haven't seen the Moneyvest index back above 4 in a very long time. So this right here is what we like to analyze. Yesterday's reading was around 3.87. We got up to as much as 3.98, then got a little bit of a pullback, and now we're well over 4 once again. So we're going to be, most likely, once this number updates tomorrow, we're going to be right above this number, shooting up to the same level as what we witnessed back in July of 2024. This right here, once again, some instances for us to remember. This happened back in, let's take a quick look. So this was back in April of 2024. So again, some of those buying opportunities appeared in April. This right here appeared in July, which was the most recent one that we witnessed in the earlier August, end of July, early August. This was back in April. And prior to that, of course, we were much higher. And this right here was also a level where, we were significantly above the 4, and we even gotten up to as much as 4.2, 4.3 level. And this was the entire rally that we witnessed since October of 2023. So that was October 2023, and then ripping up to, of course, the Moneyvest index well over 4.2, then coming down a little bit, pushing back up. This was the big sell-off for April. Good buying opportunity, pushing back up. So again, touching that 4 level, and once again pulling back. And then right now, we're once again approaching that 4 once again. So again, it's going to be really, really, it's an indicator that has been my guide. It's been one of the best indicators for me to utilize from a risk-reward standpoint. So yes, while I continue to be optimistic long term for the markets. I continue to dollar cost average in lower frequencies with some money being deployed every week. And again, next week I also have a little bit of a bullish trade because I've sold puts. But at the same time, I have to be understanding of the fact that, okay, the Moneyvest index is getting up to that 4 level, which historically has been a very low risk to reward profile, and the markets are not going to be super favorable on the long side. So keeping that in mind, I am going to be careful going into next week. Now, this right here, again, was the day. Like I said, Meta, Netflix actually underperforming, as well as Amazon, Microsoft, Apple, and Google. There were 5 companies, 5 big names underperforming the S&P 500 and the NASDAQ. So, again, money's rotating into some other parts of the market. Tesla, Nvidia doing well, AMD doing well. But if you come take a look at RSP, which is the equal weighted index, right? So that is also a very important indicator for us to look at, because RSP is all the S&P 500 companies weighted equally, trading at new all-time highs. 174.52, hitting a new all-time high. And that just goes to show that, again, equal weighted stocks are seeing a lot of momentum. Other markets, other sectors, other industries are seeing a lot of momentum. And as a result, technology is not getting a lot of inflow of liquidity. The recovery has been solid, but not for Magnificent Seven. I mean, Google, Microsoft are still down significantly from their all-time highs, double digits, in fact. So Tesla, Home Depot, Nvidia, Broadcom, Texas Instruments, we had NXPI, Qualcomm, again, semiconductors doing well. Apple, Google, Microsoft pushing higher, but not as much. Energy, real estate, industrial, materials, utilities, all of them pushing up very nicely. All 11 sectors were green, so that is good. In the last 1 week, energy's been a little bit of a losing trade. And in the last 1 month, again, energy selling off. Everything else has been very, very green. I mean, this is just picture perfect for investors as they see incredible amounts of green here on the day. And Bitcoin back over 63,000 and Ether back over 2,700 as well. Now, coming over to the most important spreadsheet, which is going to be this. And one more thing I want to mention is that the put call ratio actually just crossed over 1. So that means there's now more put options than call options in the market open right now. And that is also turned green, and it's in the 87th percentile. And that simply means that hedge funds, institutional investors, and the market makers in general, market participants, are hedging for potential downside because there's more put options against the S&P 500 than compared to call options. Another really important metric, that's why it has turned green. So a couple big updates here is that the Moneyvest index crossing over 4, first time since July. PCC over 1, flashing green. Volatility is lower, back under 16, and majority of stocks trading above their moving averages. So that is a broadening out of this entire rally away from the Magnificent Seven. RSI is almost at 62, so that percentile also approaching over 71%, and the VIX contango level at over 13.4%, extremely green, suggesting for a very healthy, stable market as of right now. Okay, now coming over to the big piece. Rate cuts are pretty much confirmed. As we already know, the Federal Reserve is going to be cutting interest rates. But now the real question is, are we going to witness a soft landing or a hard landing in the United States? Meaning, are we going to see a recession, or are we going to see some type of a soft landing where the Federal Reserve is going to successfully steer the economy out of this high levels of inflation without causing harm, without causing hurt to the overall economy? Now, this is not a video where I try to make a prediction, because as I've said before, prediction is not something that people should be focusing on. Instead, we need to be ready for all potential scenarios, right? Recession or no recession, we need to be prepared. We need to be ready. And for all, if we are prepared, if we are ready, I think that's a much better way to invest for the long term than trying to bet on something that you know, that you think that you know is going to take place. Because if it doesn't, then of course you wasted time, wasted effort, and wasted capital and opportunity cost. So coming over to the spreadsheet, 1966, the first rate cut took place after 64 months, which was not accompanied by a recession, but still the markets did drop over 23% from their all-time highs. This time around, we only witnessed a correction. We were down about almost 10% from their all-time highs. Then come over to 1984, 18 months. We saw a rate cut after 18 months. And again, if you come over, only a 14.7% decline from their all-time highs for the S&P 500. And then finally, if you come over to 1998, 28 months. And after 28 months, the markets, peaked out in July of 1998, and they dropped a little bit over 22%. So really, if you consider every time there's not been a recession, this is only considering the first rate cut and then not a recession to follow. If you take a look at no recessions at all, I mean, the markets have dropped on average by 19 to 20%. But when there has been a recession, we've dropped by over 35 to 37%. In those times, the overall bear market has also been longer lasting for 16 to 17 months with a much bigger drawdown, as opposed to without a recession, we've only been, in a bear market 5 to 6 months before the markets have rebounded back higher with only an average gain or average loss or average drawdown of about 19 to 20%. So once again, the real question then now becomes, are we going to see a recession if September 2024 cuts are pretty much priced in? Well, historical analysis tells us that there is still a 75% probability for a hard landing, something that we have discussed in the past because, rate cuts, every time we've seen rate cuts, there's been 75% of the times recessions have followed, and only 25% of the times recessions have not occurred after the Federal Reserve started cutting interest rates. So again, 3 times in the past, we've seen the recessions have not taken place after the Federal Reserve started on this rate cutting cycle. But the last 3 times, 3 out of 3 times, every time the Federal Reserve started cutting interest rates. So for example, December 2000, they cut interest rates. March 2001, we were in a recession. August 07, they started cutting interest rates. December 07, we were in recession. August 2019, they started cutting interest rates. February 2020, we were in recession. So if you do the math, 3 months later over here, September, October, November, December, 4 months later over here, September, October, November, December, January, February, 6 months later. So 3, 4, 6 months later, recession happened. The last 3 times the Federal Reserve cut interest rates. Now you can make a very, very, very strong case that in December 2000, August 07, and August 2019, there were absolutely no signs of a recession whatsoever. Unemployment was low, economy was strong, earnings were good, people were spending money, everything was perfect, right? So recession signals take time to develop, and I'm not saying that we're going to see one similar to what we have experienced in the past, but I just want everyone to understand that just because you're not seeing it right now doesn't mean it cannot appear out of nowhere in the future. Oftentimes these things tend to blindside a lot of investors and economists because when everybody's expecting for a recession to not happen, that's when it creeps up and appears out of nowhere, right? So when the consensus is so strong towards one thing, people get complacent, people start to disregard that, and that's when it appears, or that's when the risk of it appearing is the most. So I really still want us to be cautious and alert and look for signals, look for proper data, and distill the correct analysis from that data and not really disregard the idea of a potential recession. So still prepare for one, but of course, still invest like there isn't. Basically, plan for the worst, hope for the best type deal, right? So that's going to be the whole idea moving forward. So for those reasons, I'm still going to be putting up about 20 to 25% cash in my portfolio over the next couple weeks here, especially when we come over to September, which on a historical seasonality basis, it's been one of the worst months for the market. Especially volatility has averaged well over 25 to as much as 30 in the month of September the last 4 years. So those are some things to keep in mind. Yes, right now market's pushing higher, rallying almost to new all-time highs, makes us feel very warm and fuzzy and happy, and euphoria is around the corner. Greed is there, everybody's buying, everybody's celebrating, but a lot of things can change, and they do change because that's how the markets operate. Just as quickly as they give you those gains, they can take them back very, very quickly. So just want you guys to be very, very careful, cautious, be smart, never let your emotions get the best of you. Coming over to the markets now, S&P 500. So on the 30-minute time frame, by the way, volatility first, we continue to slide lower. So keeping a close eye at 15.2. That is going to be that level to keep in mind, down over 9.6, almost 10% down from yesterday's close. Now this right here is the market, and as we discussed, very, very strong support. And in my yesterday's market update, we discussed that the bulls need to really hold up the support really, really well. And that's what we did. We gapped up, we came back down to validate that support a little bit, and then pushed right back up. So a bit of a V-shaped recovery on the day. Next resistance and target, pretty much the all-time high. 56.68, 56.69. That is going to be that level to watch. And like I said, previous resistance now perfectly acting as a support for the S&P 500. Coming over to QQQs, so NASDAQ 100, same thing. This was a support that we talked about in our yesterday's market update. Previous resistance, as I pointed out, acting as a new support. We gapped up, came back down to validate that level perfectly, and then of course pushed back up. And the next target and next resistance is going to be all the way up to $487 for QQQs. So again, this is a area of support or area of demand for QQQs at the moment. Coming over to Apple, and Apple stock, as I pointed out, did underperform on the day. And on the daily time frame, starting to kind of round off slightly because the RSI did push higher. MACD is still elevated. L3 banker oscillator is still up, but we are seeing the price action move sideways as opposed to higher. And the next resistance still up to as much as 236. Support level at $207. And Apple is not giving me very bullish feels right now. So it is sort of starting to round off a little bit. And it seems like the volume is also starting to fade a little bit. So you can see 38 million shares traded versus 52 million average 30-day volume. So, definitely starting to move a little bit more sideways as opposed to higher. Talking about Amazon, and Amazon on the day also just underperforming. Bit of a doji candle, so lots of indecisiveness for Amazon. And 28 million shares traded. So that is actually really, really low. Nobody was really trading Amazon and Apple like these Magnificent Seven companies today. I think a lot of volume went towards other parts of the market, but 45 million average 30-day volume. Support level is going to stay put at 173, and target and resistance all the way up to 189 for Amazon. Tesla had a very, very nice day. Lots of volume coming in, still lower than its average 30-day volume, so 81 million shares traded. Support level is going to stay put at $208 a share for Tesla, with a resistance all the way up to $233 for this company. Still well within the context of a downtrend. So if you come over to the 30-minute time frame, you can make a case for the lower highs and lower lows very much still intact for Tesla. So that's going to be that lower high, excuse me. This is that lower high, lower low, and lower low. So we're still well within that range of downtrend for Tesla. So support level is going to stay up at $208, and next resistance we already know, sitting roughly at 233 for Tesla. Nvidia now. So Nvidia is going to be a big trade for next week. We've got earnings coming up. Nvidia's volume on the day was about 316 million versus average volume of 30 days of 343 million. So a lot of shares exchange hand for Nvidia every single day. It's actually quite crazy. Just to give you a bit of a perspective, Apple, well, not really Apple, but let's take a look at Amazon. Amazon is trading in and around the same price point for Nvidia, right? 177 million, Nvidia is about $130. Amazon's $177. So we got about a $40 difference, but the volume is just astonishing. I mean, we got 28 million shares traded for Amazon at $177. And Nvidia at $130 a share has over 300 million shares traded. So that's like over 10 times, 11 times more volume on Nvidia than Amazon or Tesla or Apple. I mean, even if you take some of the more lower priced stocks, I mean, let's take a look at Palantir, which is significantly lower in terms of pricing, 34 million. So think about it this way. Nvidia is 6 times more expensive in terms of its pricing, right? Not the market cap or anything like that, although market cap's also higher. But in terms of its pricing of the stock, it is 6 times more than that of Palantir, and it still is able to attract about 10 times more volume in terms of shares traded. Nvidia is the hot stock. Like, quite literally, Nvidia is the hottest stock right now. If you are not looking at Nvidia, you're pretty much not looking at, the hottest name in the market right now. And 360 million is just not a joke. I mean, that is a lot of, if you just do the math, 316 million times $130, we're looking at over 41. I can't even know how many zeros that is, but that's 41 something. It's either 41 billion or 410 billion, but that is a lot of shares. I'll have to take a look at how many zeros that is, but that is a lot of shares that are being traded for Nvidia. If you move back, so that's a lot of shares. Support level is going to stay put. A lot of shares in terms of value. Support level is going to stay put at $108, $109, all the way down to $96 for Nvidia. Resistance is going to be all the way down up to $139, $140. And again, next week, super important with earnings coming up. Got a resistance here, a little bit of a potential bull flag that is also forming. But if it does end up, let's say, breaking down, keep a close eye at a first near-term support around 118 for Nvidia. Coming over to advanced micro devices, and AMD, as we discussed, also has had a very nice recovery back up. So AMD, we actually have it over here, and it had a very nice recovery back up, and right now it's just under 155, trading right above that support, as we discussed, in the low 150s, and a much stronger support here, sitting down at 120s for advanced micro devices. So next target, next resistance, going to be all the way up to $184, $185 for advanced micro devices. So that is going to be that next level to watch for AMD. Coming over to PayPal and Visa, so PYPL. And PayPal here also pushing up 25 basis points, but underperforming the market. Maybe I jinxed it yesterday. So support level is going to stay put roughly at $68, $69, and the next target all the way up to $76, $77 for PayPal. So that is going to be that next resistance to watch and target level for PayPal. And Visa still well within the context of a downtrend of lower highs and lower lows. So this right here is the downtrend coming up to its support again, 266, and the next target, or more important resistance right now, is going to be this lower high. And a breakout above this is going to put us on the map to getting up to 272 all the way up to $282 for Visa. Now coming over to some of the more interesting names, like Meta Platforms hit a new all-time high yesterday, starting to pull back a little bit. Not surprising though, because we were coming up to its resistance and that area of supply. Also a bit more on the overbought side, so be prepared. Not going to be surprising at all if you do see a little bit of profit taking or some pullback on Meta, right? So support level is going to stay put down at 458 with a very strong resistance in the 540s for Meta Platforms. Netflix also hit a new all-time high recently, starting to come down. Again, we were already at a resistance here. Overbought RSI, MACD, L3 Banker Oscillator. Support level near term is going to stay put down to 661, and it can very well easily come down to that level, validate that level, and resistance, like I said, it's going to stay put at $701 a share. Coming over to Google and Microsoft. Google's still kind of trading right above that support here inside this green rectangle in the 160s. And the next target and resistance is going to be all the way up to as much as 176 for Google, and a much stronger support if it does end up, let's say, breaking down below this bear flag. Next support is going to be down in the 153 range for Google moving forward. And finally, if you come over to Microsoft, we got Microsoft also continues to pull back. We are still, I would say, well within a potential for head and shoulders. This could be left shoulder, head, and a potential right shoulder in formation with a neckline over here for Microsoft. So you got to be careful with that. Green rectangle here is going to be that area of support, sitting roughly at $399, close to $400 for Microsoft. And then finally, if you come over to Costco and Enphase, Costco is still pretty much trading near all-time highs. Resistance is going to stay put roughly at close to this 887, 890 level. And support level very well getting validated at 872 for Costco. And then finally, if you come over to Enphase, here, a very nice recovery back up, $123, bit of an outperformance on the day, and also a breakout about 120. And the next resistance and target is going to be $138. So this right here is going to be that next level to watch, and we'll go ahead and turn this level back into a support for Enphase with a reasonable breakout here on the day. And the volume, let's take a look, about 2.7 million, average 30 days, 3.5, so not bad for Enphase. So hope you all enjoyed this video and a complete update on the markets. It's been quite some week. Rest up. Next week is going to be quite interesting as well with NVIDIA earnings. Make sure that you drop a like, subscribe to the channel, share these videos with your friends and family, other traders, investors. I would really appreciate that in getting up to over 82,000 subscribers. As always, happy investing. Have a great weekend. I'll see you all in the next video.